Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, August 21, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, guess what? The first thing that you might notice is what's called a Shenanigans tail candle on the daily chart of the S&P, of the SPY. What does that mean exactly? You see this tail low from today? Well, interestingly enough, if you put the cursor on that low and you look up here on the left side of the chart up here, you'll see that the low on this tail registers at 554.73. But what you'll also notice is the market was never down that low today. Here's a 15-minute chart. Here's 554. Market was never down there today, not even close. This is today's activity. Market wasn't even close to 554. So that qualifies as what we call a Shenanigans tail candle. Where does that come from? We don't know. We don't care. When you look at an intraday hourly chart, you'll see 554.73 comes down, a pretty good pullback from where we were today. It's about 50 or 60 S&P handles down there. Can't say that'll happen tomorrow, but when we see these things, when we see these shenanigan tail candles, and the market starts doing something to head in the direction of said shenanigans tail candle, we note it. We're aware of it. We have it logged on a notepad, on a sticky note. So we're prepared. It's generally speaking, at minimum, of a target. We just don't know when or the how they'll get there. Without the shenanigans tail candle, you'll note that there was a very narrow ranging day, very similar to yesterday. It's almost like the market has run out of steam, or put another way, is eating time off the clock, resetting the tape, recocking the gun, if you will, notwithstanding the shenanigans tail candle. Stone's throw away from the all-time highs. End of the white space is just a little bit higher than today's high. And then there's a gap, officially the closing print 564.86, and then you have the all-time high. So we're not that far away from the all-time highs. You just take a look at this and you say, well, here's the area of the all-time highs, whether they come up short, whether they spike it through. We're at the highs. We're close enough to the highs. They've made a run for the highs above all the moving averages. And what we do know is the trend is your friend until your crap, the lazy swing trader Automagical algo system. What should we take a look at first? How about the Automagical algo system? Now, we've taken a look at Take Two before, but here was a final exit today. Buy alert 137.60. When was this? This was on the 5th of August, the flush out, the Monday morning flush out. And we took two profits along the way. Today was a third and final profit target, up over $22, 16% gain in about 2 weeks plus, give or take. And that was just over $160. That was final exit today. Now, if a trader didn't want to take final exit, that's up to them. From a process and a product standpoint, we took final exit. It is on the official closed trade list. Nice trade. Lazy swing trader Automagical algo system. What about inside the numbers? Live trading room, inside the numbers. Did anybody make money in there? Help a brother out. If you had successful trades, whether it was yesterday, today, let them know. Put it in the comments section under the video. How you doing in the live room? Is there value in there? Are you learning stuff? And more importantly, are you making money? Not necessarily in that order. Did you make money today? Let's cut to the chase. The answer is yes, we did. What I urge you to do is pause the video, read the notes, go back to the chart to double check the work. Let's scroll up a little bit, see what we've got as the morning starts to unfold. 8:45, what's the deal this morning? Kind of similar to yesterday, but different. 560.35, give or take, is the beginning of overhead resistance today. It's a short span, but it spans up to 560.84 is yesterday's high, which is another magnetic spot, which is resistance on a first come, first served basis. What does that mean? That means first time, best time. Run a test of yesterday's high, first time, best time, likely a pullback. So therefore, we have a zone, 560.35 give or take, up to 560.84 give or take, is the resistance zone where there should be a scalp opportunity with potential. Could we be any more clear? Translated into English, that was a short. Right of the vertical is today's activity. The two blue lines represent both numbers, 560.35 up to 560.84. The arrows pointing to the high right on that surge right after the opening bell into 10 o'clock. What is that high? It happens to be 560.85 on the button. They went to yesterday's high, spiked it by 1 penny, ripped it back or pulled it back in the other direction, providing the trade. The base hit, the stand-up double, the Whopper Junior, the low here is 559.02, representing roughly, give or take, depending on where your entry was, around 15 or more or slightly less S&P handles, SPX points, ES points, $1.50 in the SPY, however you want to look at it. We call that one nice trade. So that was before the operation. Plenty of money made in the live room today because that was one of two. The second one was even better. As a just-in-caser, if they're above 560.85 on candle closes, remember that number just from a minute ago? The door opens for 562.05. Okay, and what does that represent? How about another place of overhead resistance independent of the other two? How you doing? Independent of the other two, 562.05. We were short that number. Pause the video. Read the notes, go back to the chart, and double-check the work. We were all over it in the live room. First, we were talking around things, looking for things to trade, looking for stocks that were moving after the opening bell. We were learning, we were giving lessons, we were looking at charts, and unsuspectingly, all of a sudden, the market just started running up to that number. And I said, here we go, watch this. 562 is a short. And lo and behold, they got there, we took the short, and traders made plenty of money. 1036, here it is in the notes. 562.05 is the next place of overhead resistance. I created a zone, 562.05, give or take, up to 562.85, give or take, as a resistance zone where they shouldn't be able to waltz right on through if reached sooner than later. Remember, pause the video, read the notes, go back to the chart, and double-check the work. 1048, nice trade from 562.05, give or take. The rest is trader's choice. And as you see, they gave us the absolute whopper because look where they went down to. However long you held the trade, however much you got out of it, we call that one a whopper with cheese. It's 30 or more, 35 S&P handles. That's a whopper with cheese. Translated into real dollars, we had traders in the live room and inside the numbers making thousands of dollars today. That's just the way it works. If you were part and parcel to that party in the live room, for example, let the brothers know. Help a brother out. I'm not the brother. The brothers are all the people out there looking for the answers, looking for a place they can get help understanding how the market works and how to make money in the market. Pause the video, read the notes, go back to the chart, and double-check the work while you're helping a brother out. We had 3 possible stocks on the move today. ALC didn't hit it. JD didn't hit it. Chewy did hit it. So we're going to take a look at the chart at Chewy.com. You think we had participation in the live room and inside the numbers on Chewy.com? Chewy's a fan favorite. Traders like Chewy. 26.04, they hit it, they spiked it, they spiked 26. 26 is the same as 26.04 for argument's sake. We're not splitting hairs over pennies. And then what they do, they ripped it back up in the other direction, and they were around 27 in a matter of minutes. Nice trade. I would say this was a successful day in the live trading room and inside the numbers today. Plenty of money made today. What's going on over in Camp IWM? Well, they're headed toward the gap that we've been discussing. As long as the 20, which is the last one in the line of defense, the red sloping trend line, then they're headed for the gap left open at 216.58. Above 216.58, they start getting into this big time breakdown candle, and we'll have other numbers for inside the number trading live room members accordingly. Relative strength for the IWM today, up 1.3%, $2.77. My favorite market-leading indicator of note, puzzle piece on the table. Second favorite market-leading indicator, the folks down at the transportation department, Buttigieg's crew. Heading for the upper trend line again, we bring up the weekly chart. It becomes clear. You have a triangle, a breakout above this trend line. That's a breakout. Breakdown below this trend line. This triangle, that's a breakdown. They threatened to break out a little while ago, a few weeks ago. Sold off. Now they're back. Are they back just to run another test, or are they back to break out this time? Time will tell. We know where the line is. We watch it every single day. Up 1% today, relative strength. My second favorite market leading indicator, however, a number one, canary in the coal mine. What about the Q people? Up $2, $2.25 today, about half of 1%. A little bit of relative strength over the S&P, but not much to write home about, just a few basis points. Above all the moving averages, trend is your friend. Narrow ranging day, very similar to yesterday. We're not going to make a federal case out of that, nor read too much into it. The market wasn't moving a lot today. She's tired from the run. We don't know whether she's going to continue eating time off the clock, building energy for another run sideways, or full back a little bit in a retracement operation. We'll take it one day at a time. A little bit of downward activity today in the XLF, just down a few cents, 7 cents. Again, we're not going to make a federal case out of that either. They're around the highs. They're around the all-time highs. Nothing changed from last night. We don't need to belabor the point. Above all the moving averages, around the all-time highs, the trend is your friend. There's nothing wrong with the financials. We're looking at the big picture. Is there anything wrong? No. Can they pull back at any point in time, any day or two? Absolutely. They're around all-time highs. We'll take it at face value. Smash mouth, pretty good proxy for the tech space, the Philadelphia semiconductors, teetering at the 50-period moving average, eating time off the clock under it, building energy for another move higher to do what? Well, fill a gap up here, which is slightly above the 50-period moving average. Here's a gap. The gap is at 254, 85, 86, up in that neighborhood. It's slightly above the 50-period moving average. That's really all we have, just eating some time off the clock for the last 2.5 trading days. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible, and that is true and accurate information. We're pulling the ripcord here today. I am David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense, a market analysis.